Hello, welcome to Newscentre. India-Australia Economic Cooperation and Trade Agreement comes into effect from today. The aim is to increase trade between the two countries from $23 billion currently to $45 billion. Indian exporters across 6,000 sectors will enjoy duty-free access to the Australian market for 96% of the goods. According to industry estimates, products worth $23 billion will become duty-free from the 29th of December. Australia will get duty-free access to the Indian market for 85% of its goods, and tariffs on an additional 5% will be phased down gradually. Indian garment exports, according to estimates, could grow 3 times by 2025. Among Indian exports, Indian textiles, steel, gems and jewellery, automobiles, medical devices and engineering goods will get a boost. With the ECTA, Australia's coal, manganese ore, copper, bauxite industry will get duty-free access to the Indian market, along with sheep meat, cherries and wool as well. India has also agreed to reduce tariffs on Australian wine in a staggered manner. Australia has agreed to introduce a special category of visas for Indian investors and working professionals, including 1,800 visas for chefs and yoga instructors. Indian students graduating in Australia will get a bonus year of stay for post-study work. I caught up with the Australian High Commissioner to India, Barry O'Farrell, to know more about the trade agreement and how it benefits both the countries. I started by asking him about the goods that will be covered under the deal.
85% of Australian goods and services coming to India will have duty eliminated, and 96% of Indian products into Australia. Now that's good news for both governments and both economies, because it means prices will be lower. So for Mr Modi's ambition to turn India into a global advanced manufacturing hub, where you will need critical minerals and the like, those critical minerals will come in free of duty, assist India's manufacturing base and enable you to produce electric vehicles and solar panels at a more competitive rate to compete with the world.
Right. You're talking about how the Australian industry will also get easier access, duty concessions in India. Give us the sectors where Australia will benefit now from this trade agreement.
Well, for instance, cotton and wool, critical minerals, as I've mentioned, and other metallic ores will benefit. And the significance of cotton and wool, because India has such a magnificent and large textile industry, is that during the negotiations, Minister Goyal's department, the Department of Commerce here in India, said they expected one of the results of the reduction in tariffs to lead to an additional 40,000 jobs a year being created in India in the textile sector. That's the sort of benefit we're looking at.
Right. And as far as exports from India go, which are the sectors which will immediately get more benefits, get zero duty concessions in Australia? We believe that a part of the product lines will enjoy duty concessions from today. The rest of it will come into effect later on in the year.
So two things. So things like jewellery, furniture, pharmaceuticals and agricultural products. So people think that agricultural products are sensitive. Well, agricultural products are flowing in both directions, but flowing in a way that is sensitive to the political needs of both governments. So this is what's happening, is that, you know, whatever India is producing is available to come into Australia under these new arrangements. And the second bonus today, and the importance of introducing the ECTA agreement today, is that it starts to take effect from today. And then in 2 days' time, on the 1st of January, there's a second tranche of changes that come in as well. So it's a win-win for business, it's a win-win for exporters, it's a win-win for national economies, and it's a win-win for jobs in both our countries.
On the issue of mobility of individuals, skilled professionals, how many more visas will be available to Indian professionals?
Well, significant numbers of extra visas. For instance, a new category of up to 4 years for Indian investors in Australia, which also extends to those people working for the tech companies that are providing the technology services to Australia's services economy. 1,800 annual visas a year for qualified chefs and yoga instructors to pick up and start developing in Australia these culturally significant professions. In a first for free trade agreements, Australia has agreed to extend the amount of post-study work rights that students studying in Australia will have in future, in addition to the fact that those students studying honours in science, technology, engineering and maths will also have extended periods available to them in Australia. So what we're seeing currently is massive growth in tourism visas, massive growth in business visas, massive growth across the board, and it's only going to go in one direction, and that's higher.
How about the Indian IT industry? How will it benefit among different services and different professionals? What is the extent to which we will see increased mobility in the IT sector from India to Australia?
Well, there's something like 11 sectors where we'll see increased mobility from IT through to financial services and everything in between. And that's good news for the Wipros, the Tatas and the like. It's also good news for Australians because, for instance, I know that Tata Australia is not only bringing people from India to Australia to provide support for Australia's service economy, but also recruiting young Australian graduates to join the great Tata Corporation. So we're seeing significant developments, but the biggest benefit for the tech sector is the fact that alongside the ECTA, we've made legislative changes to stop the double taxation of these companies, where previously they were being taxed in India and Australia for effectively providing the same service. That's a significant benefit from them, and it comes into effect from the first tax financial year, which is next year here in India.
Right. I would also like to ask you about the strategy to reduce Chinese imports. How would this trade deal help Australia in reducing Chinese imports? And when it comes to increasing imports from India, in the next few years, where will India be as far as top Australian partners, Australian trading partners go?
Well, let me take the second part first. The relationship's only going in one direction. India is now the 6th largest economy in the world. India cannot be ignored. And clearly, both countries, India and Australia, have recognised that we have complementary economies. Economies where we have things that you need to grow your industries like electric vehicles and solar panels and textiles. And you have things that we need because we're not much of a manufacturing country, albeit we're a small country. And of course, we're also strategically aligned under what is a comprehensive strategic partnership. And we know that the prosperity of both our nations is essential if we're to deliver the peace, security and stability to the Indo-Pacific that we're both committed to. Now, what the Australian government's doing with China is trying to stabilise the relationship that we've had with China, which has had some trouble over the last number of years. And Penny Wong, the Foreign Minister's visit, was part of that. But it's a calm and cautious approach. It's an approach that we'll agree where we can, we'll disagree when we have to, but at all times our national interest will govern what we're doing. I think it's a mistake for people to see our relationship with other countries internationally through the lens of China. Australia, like India, makes its own decisions. Australia, like India, wants to grow the Australia-India relationship, and that's why we're opening up a new consulate generalship in Bengaluru. It's why we're pursuing an aggressive Indian economic strategy, encouraging investors to come here to see what opportunities they can assist in growing here in India, because we understand the benefits of that.
Right. Now, when it comes to imports into Australia from China, Bangladesh, Vietnam, how will this trade deal put Indian exporters at an advantage, or how do they compare to exporters in China, Bangladesh and Vietnam?
Well, firstly, Australia is not only historically a trading country, we're a country that's happily traded with anyone else. And so ultimately, consumers decide these things. It comes to price. And the importance of ECTA, and what we hope from the CECA, is that by reducing tariffs on 96% of Indian products coming to Australia, they'll be able to be more competitively fighting against imports from other countries in the same areas. So the fact that Indian textiles will come to Australia more cheaply means that they'll compete better with clothing manufacturing from other countries where there are no trade agreements.
So there will be an advantage in certain sectors over Bangladesh, Vietnam and China.
When you eliminate tariffs on 86% of products, including textiles, you clearly have an advantage with similar products coming from other countries where there is no free trade agreement.
Okay, now just to ask you about wines and spirits. India has had a 150% tariff on foreign liquor. To what extent has this agreement reduced tariffs on Australian wine? And is it only on the upper end of the wine segment?
So the agreement over a number of years seeks to reduce that high tariff that you've talked about. that's stopping Indians getting access to premium Australian wines. And so what the trade ministers did at the time was to ensure that not only can more Australian premium wines enter the market, but do so in a way that doesn't affect the Indian market, because of course each market has different price points. Our markets are more advanced, and alongside that, the wine industry of Australia has signed an agreement that they will work with the wine industry of India to grow the Indian wine industry, because it understands that there's benefits for both of us. This is a big country. It's a country that far outstrips what Australia can produce, and we're keen to not, in democracies, in genuine free trade agreements, there have to be winners on both sides. And one of the things that Minister Goyal and his opposite number from Australia decided was that a decision in relation to wine should not adversely affect Indian wine, and more importantly, the Australian wine industry can and has agreed to assist the Indian wine industry to grow further.
Right. Just to also ask you, now we will begin negotiations on the Comprehensive Economic Cooperation Agreement. How important will that be when it comes to India-Australia trade? Are there other reform measures that you're seeking from the Indian government? Any other non-tariff barriers that you see in India which you would want eliminated?
Well, both ministers have made clear that they want the CECA, the Closer Economic Cooperation Agreement, resolved quickly, which is next year, and hopefully as soon as possible within next year. And
within next year?
Within next year. And what we believe will happen, and what we'll focus on, is deepening further progress with goods and services. So there's no finish line in trade anymore, there's a finish line in other things. But also look at new areas like digital trade and procurement, because India is increasing its manufacturing and production. And Australia believes there's an opportunity to explore in relation to sustainable development and two-way investment, because we think there's benefits for both countries in those things. The Closer Economic Cooperation Agreement is important. ECTA, which comes into operation today, is like the first innings of a match, but it's like a match you've never seen before, because the next innings is CECA, but at the end of the match, both countries will have their hands on the trophy. And I have no doubt as an Australian that looking back in the years to come, that the ECTA and the CECA sign between Australia and India will be seen as the most important and significant trade deals Australia has done in its history.
Right. My final two questions, Ambassador. Would cooperation in the defence sector also be a part of ECTA or CECA in terms of collaboration in defence manufacturing, defence exports from India to Australia?
Well, the point is that India's manufacturing range is far broader than that in Australia. Australia is a very small manufacturing country. I've said before, and I'll say again, the fact that India is expanding its defence manufacturing is good news for the world, including countries like Australia, because it means the global market in defence products is more competitive. So I do believe that you'll see that, and one of the consequences of our Defence Minister being here in June was that he gave your Defence Minister a commitment that we'd go and inspect, a delegation would go and inspect the defence corridors in India. That's been done, and I'm certain that there are products there that will start flowing into Australia. So that's the good news, is that India is large enough, broad enough, and the ambition here is big, that we'll see increasing range of products. For instance, we no longer build local cars in Australia. Mr Mahindra has been exporting tractors into Australia for many years, and we're grateful for that. But I think the electric vehicles and vehicles generally from India to Australia are an opportunity for the Indian market.
What is the duty concession, for example, on automobiles?
Well, it's not covered yet, but the point is that they're all vehicles come in under the same regime, whether they come from Europe, whether they come from the United States or elsewhere. Here's an opportunity for India, which has a significant manufacturing of cars market, to look at the Australian market as well. Albeit I recognise that with 25.5 million people, fewer than the number of 9-year-olds in India, we're not the biggest market in the world.
Right. And finally, any kind of target that you have in mind as to how much trade could this achieve for the two countries in the year 2023 and 5 years from now?
Well, we know that last year you're our 5th largest trading partner. The volume of two-way trade was 23 million United States dollars, or 19,000 crore rupee, and our ministers have committed to doubling it within 5 years. I think that is absolutely doable, and the level of commitment, ambition and determination by both our governments, I think will guarantee that happens.
All right, so definitely a big moment for India and Australia. This is the first deal that Australia has signed, which is of this size in its history. We're going to take a short break on that note, but coming up, welcome back. You're watching Newscentre. Months after Made in Pharma, another Indian pharmaceutical company finds itself in the dock. Uzbekistan Health Ministry has claimed that 18 out of 21 children who were given a cough syrup manufactured by Indian company Marion Biotech have died. The Uzbek government alleges that Doc 1 Max, the cough syrup, was allegedly contaminated with the toxic substance ethylene glycol. The Uzbekistan government has also claimed that the syrup was given to children without a doctor's prescription, with doses that exceeded the standard for all children. The legal head of Marion Biotech has said that they would extend full support to the government inquiry.
देखो हमें भी अफसोस है कहते हैं अब किस वजह से डेथ हुआ अभी जो है गवर्नमेंट यहाँ इंक्वायरी कर रही है अंडर इन्वेस्टिगेशन है जो रिपोर्ट आएगी उसके बाद जो है रिपोर्ट आने के बाद जो है सही चीज़ें मालूम होंगी हमारी तरफ से कोई प्रॉब्लम नहीं है हमने गवर्नमेंट इंक्वायरी कर रही है अंडर है ना कहते हैं गवर्नमेंट का जो रिपोर्ट आएगी उस हिसाब से रिएक्ट करेंगे
सैंपल कलेक्ट किया है
हाँ गवर्नमेंट कर रही है लगी प्रोसेस में लगी हुई है हाँ जी
Uzbek authorities have not formally taken up the matter with us. Nevertheless, our embassy has contacted the Uzbek side and is seeking further details of their own investigation. And of course, we understand that legal action has been initiated by the Uzbek authorities against some people, including the local representative of the company there. And in that context, of course, we are extending necessary consular assistance to those individuals or individuals.
All right, let's now go across to Abhimanyu Sharma, who joins us from outside the office of Marion Biotech in Noida, Uttar Pradesh. Abhimanyu, you have been there outside the office of the company since morning. Any word from authorities there? What's happening there currently?
Well, there's no formal word from the authorities so far. The second round of inspection was underway. The last we had learned, the inspection is going to go on till some time. In all likelihood, it's going to end by tonight. This is the second round of inspection which is taking place, and it's a minute inspection of the documents and the evidence which is available at hand. This is the second round of inspection after the first round which had taken place on the 27th of December. Only after the report comes in and the probe ends, some action may be taken on the possibility of clamping down on the exports by this company to various countries. The company already exports pharmaceuticals to several countries, not just Uzbekistan, and it remains to be seen what action will be taken. As of now, CDSCO is in touch with the Uzbek authorities. Also, WHO is in contact with Uzbek authorities. CDSCO and the UP drug control officers had conducted a joint inspection of Marion Biotech's Noida-based manufacturing facility, after which samples were collected and were sent to the regional drug testing laboratory in Chandigarh. It remains to be seen what results will come out of the same, as the Uzbek authorities till now had alleged the presence of ethylene glycol and the suspected poisoning of various children which led to their death. It remains to be seen what is going to be the dosage which comes out as part of the report, which is going to decide future course of action by the authorities.
All right. Thank you very much for that comprehensive update, Abhimanyu. Abhimanyu reporting from the office of Marion Biotech here in Noida, and the UP government's Drug Regulatory Authority and the Central Drug Regulatory Authority have been visiting the office, the factories of Marion Biotech, and very soon they will take a call on what action needs to be taken. Let's focus now on the company in question. Sources say that the Noida-headquartered Marion Biotech has been manufacturing cough syrups since 2012. Sources also tell us that central and state drug regulatory authorities have conducted a joint inspection of Marion Biotech on the 27th of December. When we last checked the company website, it claimed to have been certified by the World Health Organization. As per the company's LinkedIn page, it's a flagship company of the Eminox Group. A preliminary check by CNBC-TV18 of the government website that records adverse incidents involving pharma companies has not found any mention of Marion Biotech. But we are awaiting clarity from the government if there have been any past lapses recorded. This is the second time that an Indian pharma company has found itself under the lens for deaths of children overseas in recent months. The World Health Organization had found unacceptable levels of diethylene glycol and ethylene glycol. The Indian drug regulator, however, claimed that samples of Maiden Pharma's cough syrups did not contain traces of the toxic substances and were found to be of standard quality. WHO has, however, stood by their probe findings. So that's a story we will be tracking very closely. But focusing now on the economy. 2022 has been a challenging year for the Indian economy, from Russia-Ukraine war to the spike in energy prices. Not to forget, kick-starting of the Fed's rate hike cycle. The challenges have been many. CNBC-TV18 Sapna Das takes us through the big government decisions to navigate the headwinds in 2022.
The initial impact from Russia's invasion of Ukraine saw Brent crude prices shooting to $130 per barrel, global food supply being disrupted, and inflation soaring. This posed multi-pronged challenges to the Indian economy. With April inflation shocking at 7.79%, the government swung into action. Adding to the freeze on pass-through of crude oil prices to petrol diesel, it restricted wheat exports in May and followed it up with a slew of other measures, including slashing excise on petrol and diesel and doubling the fertilizer subsidy. But as crude prices continued to rise, more was needed. India shrugged off intense global pressure and leaned heavily towards Russia for cheaper crude. So much so that Russia is now the top supplier of crude oil to India, upstaging traditional suppliers like Iraq and Saudi. But the government also cashed in on an opportunity these surging prices threw up. It introduced a windfall tax on oil cos and mandated them to ensure that domestic sales of petrol, diesel and ATF were at least 50% of their exports. Multiple reviews later, the tax remains, even though Indian basket of crude oil has slipped to below $78 per barrel. This is very close to the two-week average of $75 per barrel, below which threshold the windfall tax should become nil. Indications are the government hopes to garner close to 40,000 crores from this windfall tax by March end. But if the drop in crude oil prices sustain, that number may not hold. In the meanwhile, spike in global inflation prompted the American central bank to hike rates aggressively. And this pushed the rupee to record weak levels, from breaching 79 to a dollar on the 5th of July to 83.20 to a dollar on 20th October. RBI's measures to shore up the currency, which included more diversified sources of forex funding and internationalization of the rupee, have had a limited impact so far. The trade deficit continues to widen, crossing $198 billion in the April to November period. Meanwhile, between April and September, India's forex reserves dropped by $75 billion to $432 billion. Since then, RBI has managed to claw back reserves to around $564 billion, providing 9 months of import cover. It was also managed to make some headway on inflation. November CPI has fallen to 5.8%, which is within RBI's tolerance band. However, the rate hikes are taking a toll on the GDP. RBI has now revised the FY23 GDP forecast down from the 8 to 8.5% in the economic survey to 6.8% currently. That notwithstanding, India's economy expanded by 9.7% in the first half, thus continuing to be among the fastest growing in the world. The government has also stuck to fiscal consolidation and not resorted to additional market borrowings, which is a big plus. So, as we move into 2023, the challenges are plain. There's uncertainty over COVID infections, given what's happening in China and elsewhere. There's pressure to maintain growth with fiscal consolidation, even as large parts of the world stare at an impending recession, and of course, keeping inflation within comfort levels while revisiting fuel prices and maintaining a stable currency.
All right, thank you very much for summing up the economy and how things have ended for the Indian economy in the year 2022, Sapna, and what to look forward to in 2023. With that, it's a wrap on this edition of Newscentre. Don't go anywhere. News continues on CNBC-TV18.